It's July 21st, JLD here, and welcome to MSTR today. In this show, we have a lot going on. Michael Saylor's buying more Bitcoin and a lot of other great MSTR and Bitcoin news. Nothing in this video is financial advice. Please hit that like button and let's dive right in. All right, first post from Michael Saylor is stay humble, stack sats. That is what we are doing, my friends. We are staying humble. We are stacking sats. Now, you might be wondering, how many sats did Michael Saylor stack? Well, how about 6,220 Bitcoin for $739 million at 118,940 per Bitcoin? We now have a Bitcoin yield of 20.8% year to date. And as of 720, we hodl 607,770 Bitcoin acquired for $43 billion at $71,756 per Bitcoin. MSTR, Strike, Strife, and Stride. And what was the breakdown on that? Well, almost all common ATM. $736 million came out of the common ATM. Just 0.7, 0.2, and 3 million came out of Strike, Strife, and Stride, respectively. Michael Saylor went real light on the prefers this week. Maybe more information will come out on that later, but he went real heavy on the common ATM. Interesting times, utilizing the flywheel, the 4TM, the quad TM, however you want to reference this. It's happening. It's all happening. And the Bitcoin therapist wants us to know that this is just in. Legendary OG Bitcoiner Adam Back says treasury companies are the next best thing after Bitcoin. There is no second best. A little hat tip to Michael Saylor. The only runner-up is treasury companies. Adam knows it. I know it. Many of you watching right now know it. Treasury companies, they are second best. Let's go. We have a great post from Chris who says Strategy currently owns more than 2/3 of all Bitcoin held by publicly traded companies. I mean, look at the others. 28%. Strategy owns over 71.7%. And guess what? If and as this pie shrinks for Strategy, it's better for everybody because it means more people are buying it, are pouring in and buying Bitcoin. We love that. Michael Saylor expects Bitcoin is going to get $49 million per coin in 2045. Are you all in? This was his 2024 forecast back when the price was 65,000. Can you remember when that happened? That was just like a year ago. It was 65,000. I remember being like, yes, it's above 60. Now we're like, just below 120. And I'm like, oh, we got to get above 120. Like, it's just crazy what a year can do. The bear case for 2045 is 3 million. The base is 13 and the bull is 49. I'm definitely somewhere in between the base and the bull. I'm thinking 33 million. Sounds like a good number for 2045. We have a great post from the Bitcoin Archive. Google searches for buy Bitcoin have spiked. It's happening. As you can see, this spiked back up here. This was like around the election. Then it just like plummeted for a while. And now it's finally starting to come back. Is retail starting to come back in? It looks like it's, but only time will tell if that stays. Ragnar says a lot of people are selling Bitcoin for treasuries. Very interesting. Something to keep in mind when Bitcoin prices takes a breather. So if you think about it, there's a lot of people who are saying, I'm just going to get on the faster horse because since Strategy is intelligently leveraged Bitcoin, and I believe that we're going to be going into a 4 to 6 month bull run for Bitcoin. And again, I'm just saying this is what some people might be thinking. Then, hey, why don't I jump onto a Bitcoin treasury company like a Strategy, like another treasury company, like a MetaPlanet, and get more return than Bitcoin? Of course, if they're wrong and Bitcoin goes down, then they'll go down more than Bitcoin because it's intelligently leveraged both ways. But a lot of people are doing that. So it's interesting that the Bitcoin price is still staying at a very reasonable level right now, a very good level, despite this rotation happening. But again, it's kind of like this flywheel anyways, because if people are selling Bitcoin to buy treasury companies, they're also allowing people like Michael Saylor and others to ATM those stock purchases and go ahead and buy more Bitcoin. So it is just this amazing flywheel where you just win. It's just a matter of time, in my opinion. It's inevitable that you're just going to win. The MSTR S&P 500 edition might happen sooner than we think, says Ragnar. Why? Because of the acquisitions of existing S&P 500 companies. Of course, we had Coin. Now we have Block. Now Trade Desk. So these are all companies that, basically hold Bitcoin, are crypto-friendly companies or active crypto companies. It's just making it more and more of a reason that the committee will not delay for a excessive amount of time. Who knows? They might delay 1 quarter or 2 quarters. Who knows? But it's looking good for strategy. I mean, it's inevitable, but obviously the sooner the better. So let's go. And now I have some great video clips of Michael Saylor. You're not going to want to miss these two. And let's dive in.
I want to ask you about the long-term growth rate of Bitcoin and how you are thinking about that. Like I've seen you before suggest that maybe the long-term annual growth rate of Bitcoin might be something around 20%. I'm curious, like, how do you arrive at a figure like that? And I think also like that would suggest that Bitcoin would outperform the S&P 500 over the long run. I'm curious how you think about that in the context of the long-term growth rate of Bitcoin.
Yeah, well, I mean, you can look at the history, right? Bitcoin's been decelerating from 120% a year growth to 100% growth to 80%. It was clocking at 80, 90% when I got into it. It's been about 55 to 60% for the past 5 years. If you look at the rate, my forecast is it decelerates from 55% ARR down to 20% ARR over 20 years. Why is it decelerating? Well, obviously, for the law of large numbers, when you've got $100 trillion asset, you're not going to grow 80% at that level. It's decelerating because it's merging with the capital markets, and as it merges with the capital markets, then there's less and less money. It's harder. It's harder. I mean, anybody knows $1 million company can grow faster than $1 billion company, which can grow faster than a $10 billion company, which can grow faster than a $100 billion company, which can grow faster than a $1 trillion company, which can go faster than a $10 trillion company, which can grow faster than a $100 trillion company, right? Not complicated. It's simply the law of large numbers and math. The 20% target is, if I look at it, if you want a bucket of the most high quality scarce capital in the world before Bitcoin was the S&P index. It's basically equity capital that's managed, via buybacks in order to stay reasonably scarce. And you know what that benchmark is. It's been about 10% a year for 100 years. Mm-hmm. Right? So what are you going to get from the S&P? 10 to 12%, 10, 13. The actual amount's going to be a function of the growth and in the equity plus the expansion in the money supply. I think that Bitcoin will outperform the S&P index. And I think it's very simple as to why it will outperform the S&P index. It doesn't have the counterparty risk of corporate structures, and it doesn't have currency exposure, right? So the S&P is saddled with a huge amount of corporate risk factors, dozens and dozens of them, tariff, supply chain, etc. It's got legal risk, it's got political risk, it's got physical risk. I have warehouses, I have nexus, I have an operation in Ukraine, I have, natural gas facilities in Iran, right? There are a lot of things in the real world that constitute risks in the S&P. If I strip away the physical risk, and if I strip away the political risk, and if I strip away the management risk, and then every company takes in cash flows and pesos and naira and euros and CNY and rubles and dollars and Canadian currency and AUD and whatever. So when you strip away all of those risk factors and keep the pure capital, you've got Bitcoin. So whatever those things are, Bitcoin will be more than that. How much more? Or like what is the cost of that? 6 to 8% a year. So if you're targeting the S&P at 12, you target Bitcoin at 18 to 20. Why will it be 18 to 20? I stripped away the risk factors. I also stripped away the constraints. For example, you cannot go long 50x on Apple stock on Sunday morning in Iran, right? You can't, right? We could talk about why you can't, but you just can't. So you can't go long and you cannot short an equity 20x on Sunday morning. So you have all of these guardrails on equity, and they limit the leverage, they limit the utility. If I had pure capital and I could have unlimited leverage, unlimited utility anywhere in the world, 24/7, 365, there are no holidays for Bitcoin, right? So what happens on a bank holiday to a security that you should short or you should go long? Well, you can't. Okay, so that bucket, that benchmark, which is the S&P, it's less volatile, it is less liquid, it is less useful, it is more risky, it is more diversified, and it's got some human factors in it too. I mean, the S&P board just decides what to put in it, right? Like maybe they don't put the right thing in, maybe they leave something that shouldn't be in it, right? So
when it comes to my assets, diversification is key. I don't want to be over leveraged in any one thing. I mean, yes, I own MSTR and it makes up a large part of my portfolio, but I also own Bitcoin and always will. And now, thanks to my new sponsor, BitIRA, you can own Bitcoin in a tax-sheltered retirement account. BitIRA has been around for almost 10 years. As one of the trailblazers in alternative IRAs for crypto, they have built the world's most secure digital IRA. Here's why you'll love them. End-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. And it's fully IRS compliant. If you have a 401k from an old employer or an IRA gathering dust and you'd rather have that retirement account converted to an IRA in Bitcoin, BitIRA will help you convert it free of taxes or penalties. Best of all, you can trade crypto within your retirement account without taxes incurred on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Again, that's bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
Oh, these are the best performing bonds in the world. All the MicroStrategy bonds have doubled in value. Okay, how many other bonds? There is no corporate bond. There's no sovereign bond. There's no other type of bond or no preferred stock you can buy where you buy it for 100, it'll be worth 220 a few months later, right? So these are the best performing bonds in the world. It's like they've got the downside protection and they make money. So those people have fixed income funds. They have $100 trillion in those things. They have to buy that. And then they need a company like MicroStrategy that has a 100% Bitcoin treasury to create that bond. Mm-hmm. You see, you can't create a bond that doubles in value over 8 weeks if you're not 100% Bitcoin. If Berkshire Hathaway sold the same bond and they were backed by $100 billion of T-bills, well, okay, it's zero coupon, it's convertible, but it's like, what's the point? The bond has no option value in it. The T-bills have a vol of 5 and MicroStrategy has a vol of 100. Okay, so they've got no electricity in their bonds. So MicroStrategy is the leading issuer of Bitcoin-backed bonds in the world. And there's $300 trillion in the fixed income market that they can only buy bonds. But if you're going to buy bonds, wouldn't you like the lowest risk, highest performing bonds? MicroStrategy is the most interesting, highest performing, most liquid securities. Why? Because we're volatile, right? We got 100 volatility oscillator in the middle of the company. We oscillate at the bond volatility is 5. We're oscillating 20 times faster than treasury bills. Mm-hmm. We're oscillating 8 times harder than the S&P index. So we put this crypto reactor in the middle of the company. It makes the bonds very, very compelling. That allows the ARBs to do their thing, allows the fixed income guys to do their thing. But when we sell the bond, the spread for us is 70 to 80%, which means that 80% of the economics go immediately to our equity holders. And so the leverage in the bond for the Bitcoin maxis is extreme. Mm-hmm. We borrow $4.2 billion that's free, and we buy Bitcoin. And if Bitcoin goes up 50% a year, that means the 4.2 is going to double in 14 months or 18 months. So you've got 4 to 8 to 16 to 32. So there's $32 billion worth of leverage on the back end. We're only going to pay back the $4 billion of bonds, but we pay the $4 billion of bonds with $1.5 billion worth of equity at the time that we actually issue the bond. So the financial leverage is extreme, and the people that get that are the equity holders. So in essence, MicroStrategy is like a big crypto transformer, a Bitcoin transformer, high voltage Bitcoin, scary, high voltage Bitcoin comes in the front. And then on one side, we step it up to be extreme high voltage. That's how you outperform NVIDIA. You go, double Bitcoin or 1.5 Bitcoin. And then we give everybody low voltage Bitcoin, safe Bitcoin, low risk Bitcoin, low volatility Bitcoin on this side.
Right.
And the irony of it is everybody's getting exactly what they want. And the people that are buying our bonds or equity, in some cases, they wouldn't buy the spot ETF. But in many cases, they couldn't. Not only would they not, people are like, well, why don't they? They can't, they won't, they don't wish to. Mm-hmm. It's kind of like I have 480 volt 3-phase power on that dock. It'll power up a 500-ton yacht. You're not going to plug it into your blow dryer. Right? Has to go through it. If you go to the back of my property, I have a massive transformer, massive, to step down the power. Mm-hmm. Right? There's a lot of value in giving people, what they can consume. And there's someone that makes a living converting that power into batteries and selling you a little battery pack so you can put it into your kids' toys. Mm-hmm. And you know what the markup is? It's like a factor of 1,000 markups. Like, the power would be much cheaper if you took it off the dock. I'm like, yeah, well, if I plugged my little kids' toys into the dock, I would electrocute my kid. And so what we're doing is we're not electrocuting the traditional market. The traditional market can't handle Bitcoin.
Right.
It doesn't want 60% a year interest that's volatile. It wants 6% a year interest. By the way, that's only 10% of Bitcoin. If I give them the 6%, I get to keep the other 90%. And who gets that? My equity holders get it. What's the second best? There is no second best.